Now let's bring in Dan Niles, Niles Investment Management founder. Dan, it's like we hit the rewind button to April 2nd, but before the president held up that confounding chart to a lot of people. And there were some headlines crossing where people thought this tariff rate was going to be at 10%. And it wasn't great, but there was a bit of a sigh of relief. S&P 5450, around the level where we closed today, takes us just a bit above the April 3rd lows after these tariffs were initially announced, and the S&P had dropped 4%. So are stocks more likely to do better from here now or worse?
Well, I think you can't fix all your positioning problems in a day. So I'll take you back to when Lehman Brothers failed, right? Back then, the government made a huge mistake as well. They let Lehman Brothers fail. The market was getting cratered. And then on October 28th, there was the expectations of rate cuts, and the S&P was up 10.8% in one day. It then gained another 6.9% over the next 5 trading days, before, of course, falling 25% to November 8th. So to some degree, this is like that, where you have a policy mistake, the market gets cratered, people figure it out, they've done it wrong, they fix it, it rallies. I think probably the two things I'm looking at is the S&P was near 5,700, I believe, before he held up that chart. That's probably near where the upside is. And I look at the VIX, and I go, the VIX was at about 22 on April 2nd. I think it peaked at 28, I want to say, like in March before that. And so if the VIX kind of gets down back to those levels, that's another data point I'd look at and say, okay, now we can go back to focusing on fundamentals. And to some extent, how markets react to JP Morgan, Wells Fargo, BlackRock on Friday morning, that'll give you another tell as to, where are we in this terms of repositioning trade versus going back to focusing on fundamentals.
And what about the credibility side of this? The administration had been saying we're looking at Main Street, not Wall Street, but we just heard that they said today that the president was looking at all these Wall Street indicators, the bond market, the stock market, what some bank titans were saying. The administration said this is not a negotiation, and now they're talking about how much they're negotiating and pausing to negotiate. Do you believe what they're saying?
Well, absolutely. Everybody's human, right? There's what you say, and then there's actually what you do. And my thing, you had me on an interview on Monday, and I talked about, I think getting out of all my shorts and covering all of that and getting short volatility. Because the one thing that happened, I believe, that day when the market got crushed on Monday morning and then kind of rallied was you got an idea of what a change in sentiment could do, where the market was down 4.7% at its worst. Then it was up 3.4% at its highest. And then it kind of came back in. But why did it do that? Because people thought that there was some chance of them backing off of tariffs. The other thing was it was becoming clear that Scott Bessent, who, don't forget, he worked with George Soros back in the day. He was involved with, the shorting of the yen, the shorting of the sterling. He knows how global markets work. He was being put in charge of the trade tariff negotiations with Japan. And so to me, that was a sign that President Trump was putting cooler heads in charge of the tariff policy, seeing what was going on with the stock market. And so that also gave me some hope that at some point cooler heads would prevail, and that's obviously what ended up happening. But I just want to be very clear about this. The problems that the stock market had before are still in existence, much like, yes, you got a 10.8% rally on October 28th of 2008, but the market kept going down. You still have high valuations. You're still going to have, you have tariffs. They're just not as high as they originally were. And that's inflationary. Earnings estimates have been going down for the S&P 500 since the middle of last year. 6 of the 7 Mag 7 had revenue estimates cut for the March quarter when they reported their December quarters. All those things are still there.